A private alliance had fractured. Confidential messages were suddenly outside the room. Federal investigators were demanding records. This was the PGA Tour bombshell nobody expected. Phil Mickelson's inner circle leaks. Private messages after partnership collapse. The headline suggested revenge. What actually happened carried far greater consequences. At first, nobody knew who had broken ranks. The leak came from a closed investor network tied to Mickelson, not his family, caddy, or LIV teammates. Members had watched money disappear, confidence collapse, and pressure build around a troubled oil company. One message changed everything. Mickelson reportedly told the group that a company announcement was coming after the market closed. He denied knowing its contents and said no related trade followed. A separate recording raised the stakes. Investors discussed a potential $200 million equity raise. Days later, Sable Offshore disclosed that it needed at least $225 million in new equity. The SEC and federal prosecutors later demanded company documents tied to the report and securities trading. No public charge against Mickelson has been established. Subscribe now for the stories golf cannot contain, because the real bombshell was not simply that private messages escaped without warning. It was what those messages exposed behind closed doors. Behind those doors sat a private investor network built around access, optimism, and a shared belief that Sable Offshore could pull off a comeback. Phil Mickelson was not standing at the edge of that circle. He was inside it. The six-time major champion had become one of the company's most visible supporters, repeatedly defending Sable's effort to restart oil production off California. His influence gave the project attention that an ordinary energy company could never buy. Reported contact with Chief Executive Jim Flores offered other investors something more valuable, the feeling that they were close to the source. That feeling became dangerous when the investment started moving against them. Sable's entire future depended on bringing the Santa Ynez unit back into commercial operation. The offshore platforms had been shut from the market after the pipeline system connected to the 2015 Refugio oil spill stopped transporting crude. Sable acquired the assets with an ambitious plan to repair the system, overcome California opposition, restart production, and create enormous value. Supporters saw a neglected asset waiting to be revived. Critics saw aging infrastructure, environmental risk, and a company racing against financial deadlines. Mickelson's connection made the story irresistible to golf fans. He had spent years presenting himself as the outsider willing to challenge powerful institutions. His move to LIV Golf had already transformed him into one of the sport's most polarizing figures. Sable offered another battle against an establishment, this time involving California regulators rather than PGA Tour executives. His social media posts treated the company's struggle as a fight against political obstruction. Investors who agreed with that view did not simply own shares. They became part of a cause. Private groups often feel strongest when everyone is winning. Losses test every relationship, court decisions, regulatory resistance, missed expectations, and a falling share price began changing the mood around Sable. Members who once trusted management's confidence started questioning what they had been told. Some had put serious money behind the project. Their frustration was no longer theoretical. Every delay damaged portfolios, reduced patience, and increased suspicion. The partnership collapse in this story was not a formal corporate divorce. No verified filing shows Mickelson ending a legal partnership with Sable. The collapse happened inside the alliance that connected management, prominent supporters, and selected investors. Trust weakened. Confidence turned unstable. Someone with access to private communications eventually allowed those communications to reach Hunter Brook Media. The source has never been publicly identified. That uncertainty makes the leak more unsettling because nobody outside the group can say whether it came from revenge, fear, financial anger, or concern about what was being discussed. The sensitive Mickelson message reportedly appeared on September 29, 2025. He told the investor group that he had spoken with Flores that morning and that an announcement would arrive after the market closed. According to the message, it could be an 8K filing or a press release. Sable filed an 8K later that day announcing an alternative strategy for moving its oil to market. The stock initially jumped in after-hours trading, then surrendered those gains during the next session. That sequence raised a serious question. Why did a selected group know that a potentially significant company filing was coming before ordinary shareholders knew? Securities rules can restrict public companies from selectively disclosing material non-public information to favored investors. The reported message did not establish that Mickelson knew the details of the announcement. It also did not prove that he traded. Still, it placed his name inside a conversation about information arriving before a public filing. Mickelson responded by drawing a firm legal line. He said he did not know whether the announcement would be positive or negative and denied making any related trades. His argument was simple. Knowing that an announcement may arrive is different from knowing what the announcement will contain. Available public evidence does not establish that Mickelson bought or sold Sable stock because of that message. Authorities have not publicly charged him over the episode. Those distinctions matter. Rage can attract an audience, but false certainty can destroy a story. The bombshell is not that Mickelson was proven guilty of insider trading. Its real force comes from a private investor communication tying him to advance notice of a company announcement while Sable was under severe pressure. That exposed the closeness between a famous shareholder and the leadership of a public company. It also showed why the collapse of trust inside the group carried consequences far beyond an embarrassing screenshot. The investor call pushed the controversy into more serious territory. Hunter Brook reported that Flores told a select group in October 2025 that Sable would probably need to raise as much as $200 million in equity before the end of the year. New equity can dilute existing shareholders by increasing the number of shares in circulation. Investors usually care deeply about that possibility, especially when a stock is already unstable. According to the report, the potential raise had not been publicly disclosed. When it was discussed on the call, Mickelson was connected to the leaked group chat, but available reporting does not establish that he spoke during that recorded call. This detail must remain clear. The controversy involved overlapping investor communications, not one single meeting where every statement came from Mickelson. Some voices on the recording were also difficult to classify as company representatives or outside investors. Even so, the substance of the financing discussion became harder to dismiss after Sable's next public move. On November 3rd, 2025, Sable announced an amendment to its secured loan with Exxon. The amendment required at least $225 million in net equity contributions before it could become effective. It also increased the annual interest rate from 10% to 15%. That disclosure did not validate every allegation in Hunter Brook's report. It did, however, confirm that Sable faced a major need for fresh equity only days after the leaked call described a possible raise of up to $200 million. The company's board reacted by creating a special committee of independent directors. Its purpose was to investigate the allegations contained in Hunter Brook's report. Sable acknowledged that the October call had taken place, although it did not accept Hunter Brook's full interpretation of the recording. Earlier responses had questioned whether circulated audio was artificial intelligence generated or altered. Hunter Brook said expert analysis of the longer recording made major AI manipulation unlikely. The dispute over authenticity added another layer of chaos because investors were watching the company challenge the evidence while its board opened an investigation into the same report. Then the private controversy attracted federal attention. On December 2nd, 2025, Sable received document subpoenas from the Securities and Exchange Commission and the United States Attorney's Office for the Southern District of New York. The company later disclosed that the requests related to issues raised in Hunter Brook's October report, trading in Sable securities, and connected matters. Sable said it was cooperating and producing documents. That development changed the scale of the story. Media leaks can be dismissed as hostile reporting, but a federal document demand cannot be treated as ordinary internet noise. It still does not prove criminal conduct. Investigators request records to determine what happened, who knew what, and whether laws were violated. Sable's own filings warned that the review could consume management time, create legal expenses, harm its reputation, and expose the company or certain individuals to penalties if authorities eventually pursued enforcement. The filings did not say that Mickelson personally received a subpoena. Those filings announced no case against him and did not identify him as a target. Any script claiming otherwise would move beyond the available facts. His presence remains significant because his reported message formed part of the wider allegations that preceded the government requests. The pressure surrounding his name is reputational before it is legal. That reputation already carried scar tissue. In 2016, Mickelson appeared in the SEC's Dean Foods case as a relief defendant. The SEC did not accuse him of wrongdoing under that designation. It alleged that he traded Dean Foods shares at the urging of gambler Billy Walters and made more than $931,000 in profit. Mickelson agreed to return those profits plus interest, totaling more than $1 million. Walters and former Dean Foods director Thomas Davis faced the insider trading charges. Mickelson did not. That old case does not prove anything about Sable. It explains the immediate intensity surrounding another story involving private information and a public stock. Mickelson understood that history would be pulled into the conversation. He argued that the experience had made him exceptionally careful. His denial of trading in the Sable episode directly addressed the most damaging inference viewers could draw. He also attacked Hunter Brooks' reporting and described the allegations as slanderous. The publication disclosed that its affiliated investment firm held no position related to the article when it was published, although its positions could change later. That disclosure matters because Mickelson's supporters suggested the investigation was designed to push the share price downward. Sable's filings likewise discussed risks from short sellers and unfavorable reports. Yet the existence of a hostile motive, even if proven, would not automatically make authentic communications meaningless. The content still required examination. There is another reason the headline feels like a PGA Tour bombshell. Even though the tour had no role in the oil company, Mickelson remains a central figure in golf's institutional war. Every controversy surrounding him is filtered through that rivalry. Supporters of his LIV move tend to see another coordinated attack. Critics of his motives see a pattern of secrecy and financial risk. The Sable leak landed inside that divide. That reaction can obscure evidence. The reported chat includes no tour executive, while golf authorities did not trigger the subpoenas. Mickelson himself forms the bridge to golf because his fame amplified Sable's message and transformed a niche energy dispute into a sports story. His involvement gave the investor network credibility among supporters who trusted his judgment. Once the messages leaked, celebrity power magnified questions about access, timing, and influence. The scandal crossed into golf because Mickelson carried it there, not because the PGA Tour entered the room. Golf fans may wonder why Mickelson entered this world so publicly. His career has always involved calculated risks. Some produced historic victories. Others created controversies that followed him for years. Sable offered the kind of asymmetric bet that could attract someone comfortable with danger. If the pipeline returned to full operation, the company controlled a valuable offshore resource. Failure could leave shareholders exposed to debt, litigation, dilution, and regulatory defeat. The operational story eventually delivered a twist. Sable began oil sales on March 29, 2026, after federal intervention supported the restart of transportation through the Santa Ynez pipeline system. That achievement prevented the simple ending many critics expected. The company had not disappeared. Its central asset had started generating sales again. Survival did not erase the financial strain. Sable reported a first quarter 2026 net loss of $197 million. It ended that period with $956.3 million in short-term outstanding debt and $52.2 million in cash and cash equivalents. During late June, the company priced an offering of more than 32 million common shares at $3.08 each, alongside $300 million in convertible senior notes. Those numbers showed that the struggle had changed form rather than vanished. For the investors inside Mickelson's private circle, that outcome created a bitter contradiction. The company achieved the restart they had spent months defending, but the route there involved steep dilution risk, expensive debt, federal scrutiny, and a damaged share price. An alliance built on confidence could not remain untouched after private frustrations became public evidence. That is why the title survives the factual test when understood correctly. Mickelson's inner circle was the closed Sable investor network around him. Within the headline, private messages refers to communications from that network that reached reporters. Partnership collapse describes the breakdown of trust inside an informal financial alliance, not a documented dissolution between Mickelson and a legal partner. More importantly, the leak exposed how much access selected investors appeared to possess, while ordinary shareholders waited for public filings. The deepest revelation is not the identity of the leaker. That person remains unknown. The real revelation is how quickly loyalty changed once money, credibility, and legal risk collided. Mickelson entered the Sable battle as a powerful public defender. He emerged from the leak facing questions that no confident social media post could erase. His supporters can point to the successful oil restart and his denial of trading. Critics can point to the advance notice, the private access, and the government subpoenas issued to Sable. Neither side can honestly claim a final legal verdict. The investigation described in company filings remained unresolved in the latest verified disclosures reviewed for this story. What remains undeniable is the damage caused by the fractured circle. Once private words became public, an investment dispute spilled into the golf world. Mickelson's celebrity endorsement then became part of a federal document review involving the company he had championed. Ultimately, the greatest danger came from the private room rather than the course. Subscribe, turn on notifications, and tell us whether Mickelson was unfairly dragged into Sable's crisis or took one risk too many.